The live intraday price for Strive Inc., as in ASST, is $1.6056, marking an astonishing jump of 45.96% in today's session, as of 10:24 a.m. Eastern Time on October 27, 2025. That is an explosive move, especially following a period of intense volatility and a deep pullback. Now, the common expectation you might have is that this massive swing is purely a reaction to the finalized Semler Scientific merger, which was the major headline. While that merger is absolutely the bedrock of this move, what you might not realize is that the truly unexpected catalyst driving this current Strive stock price surge isn't just the merger itself, but a seemingly secondary piece of news, a very public vote of confidence from a well-known figure in the Bitcoin ecosystem. This wasn't some institutional filing that flew under the Fidelity or Interactive Brokers radar. It was a social media post, now a part of an official SEC filing from a prominent investor announcing a significant stake, over 1 million shares, and lending a substantial degree of personal endorsement to Strive's new leadership and Bitcoin-treasury strategy. That personal, public conviction has seemingly broken the spell of skepticism that had been dragging the stock down, creating a sudden and powerful buying frenzy that far exceeded what a standard merger announcement would typically generate after the initial news cycle. The general belief about Strive Inc. on online investment forums and among retail traders has been one of extreme speculation, a classic tug-of-war between aggressive growth investors and those focused on fundamental metrics. The expectation was built on the foundation of Strive becoming the first publicly traded asset management company with a core stated mission to be a Bitcoin treasury firm. This vision, championed by its high-profile founders, promised a new type of financial entity that would aim to maximize Bitcoin per share and, critically, outperform the underlying digital asset over the long term. This narrative fueled a breathtaking run earlier in the year, turning it into a darling for some high-risk, self-investing traders looking for crypto exposure in a stock wrapper. The reality, however, has been much more complicated. The high-flying stock hit a wall in mid-October following a necessary but fear-inducing SEC filing regarding the potential resale of a massive number of shares. This announcement, tied to the complexities of its capital structure following the mergers, created the immediate tension in the stock story. It was a massive overhang, a specter of dilution that completely overshadowed the strategic acquisitions. It sent the price spiraling, wiping out significant gains and transforming the narrative from growth darling to dilution risk nightmare in the blink of an eye. This is the contrarian take that you must appreciate. The current spike is less about a new fundamental strategic advantage, which was already known, and more about the market suddenly seeing a path through the near-term technical fear of that massive share filing. The public endorsement acted as a permission slip for scared retail money and opportunistic short-term traders to pile back in, fueling a short squeeze on the back of extremely high daily volume, which is currently surging past historical averages. This suggests a classic momentum trade is unfolding, which carries its own set of risks and rewards that any user of Robinhood or any other online investing app needs to consider with extreme caution. The recent stock movement for Strive Inc. is defined by wild volatility, a characteristic often associated with companies undergoing massive strategic shifts, especially in the crypto-adjacent space. Just days ago, the stock was trading significantly lower, mired in the low single digits and struggling to break free from the selling pressure triggered by the potential share sale. Today's surge, which saw the stock open significantly higher than its previous close and continue to climb on heavy volume, represents a powerful counter-narrative. The volume trading, which is already in the hundreds of millions of shares just a couple of hours into the session, is a clear indicator of institutional and retail participants aggressively positioning themselves. This isn't passive accumulation. This is a high-conviction momentum chase. The institutional activity, while not fully quantifiable in real time, is clearly present in the form of massive block trades, which are the only way to move this kind of volume in a small-cap stock so quickly. While the institutional holdings reports from mid-year showed early entrants like Millennium Management and Pantera Capital, those filings are always delayed. The current action suggests a re-engagement from these types of fast money funds who trade on catalyst news and technical breaks. The stock is currently hitting its daily high, pushing past resistance levels established during the recent sell-off, which is exactly the kind of technical breakout that triggers automated buy orders on platforms like Interactive Brokers Trading and proprietary algorithms used by large institutions. Sector momentum is also a factor. The underlying price of Bitcoin has been relatively stable, but the enthusiasm around Bitcoin-treasury companies in general has ebbed and flowed. Strive's strategic move, which culminated in the Semler Scientific merger, is an aggressive play to scale its Bitcoin holdings dramatically. The market is finally, forcefully pricing in the strategic value of nearly 11,000 Bitcoin in the combined entity's treasury, which is a substantial holding for a company of this size. This is a classic example of a stock with a low float and high news flow exhibiting extreme sensitivity to any favorable development, especially one that counters a dominant fear-driven narrative like dilution. It highlights the kind of rapid swings that require constant attention, something your average Schwab Intelligent Portfolios client is simply not designed for. This is strictly a situation for the active trader. To understand the core attraction and risk of Strive Inc. stock, you have to look past the day-to-day noise and understand what the company actually is now. Strive, following its complex merger with asset entities and its acquisition of Semler Scientific, has established itself as an asset management Bitcoin treasury company. Its stated focus is twofold. First, it's a traditional asset management firm through its subsidiary, offering a range of financial products, including ETFs and a direct indexing platform with over $2 billion in assets under management. The funds often incorporate a focus on corporate governance, a subtle but important distinction from passive managers. Second, and this is the main driver of speculation, it is building a massive, publicly traded Bitcoin treasury. The goal is simple, yet incredibly difficult: to hold a significant amount of Bitcoin on its balance sheet while also actively working to increase the Bitcoin per share metric. This means its performance is measured not just against the S&P 500 or a finance sector index, but against the performance of Bitcoin itself, the hurdle rate. The business model is less about generating traditional fees from its asset management business, though that provides a crucial source of cash flow and credibility, more about executing a successful capital allocation strategy focused on digital assets. The recent history is all about this aggressive transformation. The company has moved rapidly, raising capital, completing the merger with asset entities to become public, appointing a new Bitcoin-focused CIO, and then finalizing the all-stock merger with Semler Scientific to absorb their significant Bitcoin holdings. This pace of change is why the stock price chart looks less like a gradual climb and more like an EKG of someone running a marathon. Spikes of euphoria followed by periods of sharp correction as the market processes each new piece of news and the associated risks. The recent filing for the resale of over 1 billion shares, while technically necessary for the company's complex financing and merger structure, represents the primary source of investor fear, and the current rally is a direct counter to that fear. This is the expectation, massive growth, versus reality, massive structural complexity and dilution risk playing out in real time. This is certainly a very different kind of value proposition than the stable, diversified offerings you might find within Fidelity Investments or the automated simplicity of a SoFi robo-advisor. This isn't your grandma's value stock, it's a vehicle for a very specific, aggressive conviction. Looking ahead for Strive Inc., the future outlook is bifurcated, sitting squarely between two major narratives. The primary catalyst for sustained price momentum is the successful execution of its core thesis, increasing Bitcoin per share. This means two things: either acquiring more Bitcoin through future capital raises or strategic mergers, or seeing the value of its current holdings rise dramatically faster than any potential dilution. The market will be watching the company's next earnings report and any subsequent balance sheet updates like a hawk for evidence of accretive moves. The appointment of a highly regarded Bitcoin-focused CIO is a critical piece of this puzzle, as the market now expects institutional-grade, alpha-generating strategies to be deployed. If the team can consistently demonstrate superior capital allocation and a reduction in operational burn,